Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Always a pleasure, Jim. Thanks for inviting me on.
Rick, the markets, are they acting in a way that you would have expected, or are they in their own little world?
Well, they've always been in their own little world, and the more you kind of structure your ideas about the market around technical analysis, the more you are able to understand how detached the markets are from what we might call observable reality. So here, I basically am in the sky is falling, doomsday is right around the corner, don't try to save yourself, we're all screwed camp. But in my technical chartist life, I've got a target of 3153 for the June E-mini S&Ps, meaning from the time I put that forecast out, we had a 250-point rally ahead of us, equivalent to close to 3,000 points on the Dow. So I was and am still very bullish. It's kept us on the right side of the market, even on those days when they hit it pretty hard and you think, oh, what's going on? So the market, in normal fashion, is just acting nutty.
Now, of course, what kind of nuts and berries are out there?
Well, all the yo-yos go after these story stocks. So like 6 stories, you need to be a real genius to figure out that we should all pile into Amazon and Netflix, the 2 companies we know are doing well. And now apparently there's this idea that's gripped the proletarian mind that America has become a nation of burrito eaters more than ever before, because Chipotle is absolutely going bonkers. The irony being that when Chipotle was getting slammed for a couple years, it was because they were having trouble that a couple of a bacterial and even a viral agent had shown up in Chipotle food. So the stock took a 2-year hit on that, and now, it's barnstorming with the lift of the pandemic.
If you're trying to look at sectors that are doing well and others that are dumping, what are they?
Well, I have to say that I'm still paying my experts, consultants who handle my website and my marketing. Everything online is doing fine. Silicon Valley evidently thinks, the tech sector thinks, that hell, we don't even need Silicon Valley anymore. We'll invent a virtual place because we can get all the work done without having people in one place, especially where starter homes are $3 million. So, or at least were. So tech is doing good, and of course, healthcare now is mainlining pure methadone there in the form of government subsidies, handouts. So healthcare is going great guns, and I like the online gamers because whether or not we can all sit around a poker table and exchange contaminated cards or not, there's some good online gaming solutions. DraftKings, for one, has taken off like a bat out of hell. And pieces of the entertainment sector that are mainly online without the baggage of in Disney's case, theme parks. Disney has some things going for it, but it's got the drag of theme parks. And, anything that is going to operate at 50% capacity, we better stay away from that, because we know that 50% is essentially a slow path to bankruptcy.
We'll have more with Rick Ackerman right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Rick Ackerman. Rick, what would happen if after all of us being slowly released back into public and getting things like our hair cut or maybe actually sitting at a restaurant table to have a meal instead of taking it out in cardboard or styrofoam, we have another resurgence of the virus during our usual cold and flu season. What's that going to do to the economy?
Yeah, I think it'll be lights out. It's one thing to speak of the resurgence in the virus and COVID-19, the disease, affecting hundreds of thousands or even millions, killing millions of people. And of course that will be a tragedy on an epic scale. But on the economic side of things, it'll absolutely be lights out, because even if you accept the idea that we're having a V-shaped recovery in the stock market for sure, but a U-shaped recovery in the real economy, if we have some sort of flare-up in the fall and the market relapses, it will be lights out. We're going to be in a state of barter probably when that happens, and all economic systems, the markets will all collapse. That'll be the end of us.
Do you think governments just might throw their hands in the air and say we're not going to lock people down again?
That's an interesting question, because we've been through it once, and if we have, as part of that experience at that time, part of the decision making, this idea that as tight as we locked down, it wasn't tight enough to talk about locking down any tighter. It puts that question that we're dealing with now, like economic damage versus pandemic damage. It puts it in such stark terms. We're basically saying it may go. Actually, as I think of it, it might go the other way. Though they might say, "Look, we're going to have to let this disease do its killing, because we obviously didn't get it the first time, and we're going to need to let the virus run its course." So that would be a logical alternative to attempting to tighten even more than they have this time.
Now, cruise lines, of course, they have something like 100,000 crew members are trapped on board these ships that aren't allowed to dock or depart any of the people on board. So it's going to be a while for them to get back to normal. And countries just don't want to accept these folks. Do you think the cruise ship business is ever going to come back to the extent where people like us, and it is the baby boomers who really love the cruises, will feel safe getting back on one?
I think only if the cruise lines promote instead of singles mixers and promoting cruises for people whose affinity is jazz music or blues or something, or playing roulette. The affinity groups are going to be people obsessed with hygienic controls, with sanitation. So, if you want to sign up for the all-star fun-filled 10-week sanitation cruise, be my guest. But the cruise. These cruise ships, some of them, they only within the last few years started building the mega cruise ships. They're so big, and they attempted design. Some of them, they have a design where there's a big portal window on one side. It requires sort of shifting everything in the boat around so that the lighter side with the big window does not allow the boat to tip the other way. So we have a huge investment in infrastructure. I say we, but it's really private investors and the companies that run the cruises. But on a much grander scale, we have a similar problem with all transportation infrastructure. We have more airplanes right now than we may ever need again. And as far as the subways, the measures they've taken to attempt to not even coax people back into the subways. We don't want to do that, but we just want them to know that there are guys spraying the cars down every day. And until someone gets on a car at one particular stop that has the virus and reinfects the whole thing, that everything will be all right for the 6 minutes that between when the car has been sterilized and when someone gets on it. So when you talk about writing off all the subways and buses and trains, that's a pretty big deal, and it even dwarfs the capital destruction of writing off the shopping malls. So that's kind of where we are, and even though the stock market doesn't seem to know it.
We'll have more with Rick Ackerman right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, is the retail experience a write-off now, and are shopping malls about to become the latest ghost towns?
Yeah, they were in big trouble before this. And, but the trouble was proceeding at a pace that was allowing the REIT bag holders, to slowly reshape the shopping malls. They would tear them down and then take the property and dedicate it to multi-use, meaning offices, residences, some retail. And that was happening just quickly enough to prevent a wholesale collapse in the shopping mall sector. But now the destruction that will take place, it's going to be wholesale. There's no way to save the malls, and even the big tenants that we haven't heard from, the other shoe is yet to drop. Nordstrom's will be one, and I guess Macy's has more publicly sort of given up the ghost here, but the malls can't possibly survive. And of course, one of the main metrics for mall success is really how well the ancillary stores do, the little guys, because, the existence of the little stores and malls is predicated on how much traffic the bigger stores draw. So the little guys are all going down too, and it's just going to happen at a much faster pace than anyone could have imagined before the pandemic.
Well, even Neiman Marcus, which specialized in high-end sales, they're in trouble. They're going out of business.
Yeah, Neiman already went into bankruptcy, and it's dominoes at this point. I don't see who could possibly survive in the retail world. I think it's going to be, in a way, a boon for smaller independent retailers, not the ones who are trapped in the malls, although they might survive too. The malls themselves, in part, could be repurposed for smaller retail, but the pie has gotten much smaller. I mean, there are fewer retail dollars, fewer shoppers, more online shopping, so it's kind of a rear guard action.
Well, you also said we might see a society where young people go out and are about, and all of us over 60 just stay huddled up in our homes and are scared to go out, and that's going to have a big impact on the way society comes out of this as well.
Yeah, I think even though it's not quite a settled matter politically, we're going to remain at war, red versus blue, for as long as anybody can stand it. At a practical level, the way forward has been pretty much defined. I think, and it hit me the other night. I was out on Atlantic Avenue in Del Rey, where on Saturday nights it's just sort of a cavalcade of Lamborghinis and incredible looking women. And I went out this last Saturday, and things were they were swinging in a maskless kind of way. And it struck me that the young people are really, at this point, fearless, and that's a good thing. Statistically speaking, based on what we know about the virus so far, relatively few of them are going to die. And so they're going to open up the economy to the extent that they have a piece of the action. And I think as that happens slowly, we old farts in that vulnerable age group, 65 and above, let's say, are going to rejoin according to our personal sense of risk. We're all going to decide in our individual lives whether we want to go to this restaurant or go to that ball game or whatever. And, well, I say ball game, but it's going to be a while before 20,000 of us get together in a stadium. So that's what's going to happen. The economy will open. Those who do open will have some pretty good guidelines as to the precautions that need to be taken. They'll get either more stringent or looser depending on what we learn about the virus in the months ahead. But so we're going to reopen, and each of us will have the option of joining or not.
How's gold been doing?
Well, I'm always with the point that we've talked about the last couple of our conversations. I think gold's in a bullish market, not a bull market. It's strong enough, just based on uncertainty. It couldn't hurt to have a little gold as insurance, and I think that's very good support for gold. It gets beaten down gratuitously, pounded to the mat for no good reason all the time. But the basic the trend has been up. So gold is moving higher in a struggling kind of way. I've got a target up there above 1,800 now, but it's a very frustrating market for hardcore bulls, and I don't think we're going to get that. There's so many junior miners, exploration companies, and bigger mining companies that have assets that are so undervalued at this point. It's absurd, and someday, I suppose, there's going to be a play in those stocks, and of course the economics of mining have turned very much in their favor. Labor and energy, the cost of both will have decreased hugely. So the operating margins have improved, and here we've got these gold stocks not quite languishing because some of the vehicles that track them, like GDX and GDXJ, they're moving higher. But not higher in the way that's eventually going to happen if all this gold in the ground comes to that it strikes the masses.
Is the automotive sector going to come back? Because I just saw a story that bicycle sales in the U.S. have boomed to the point some bicycle shops have run out of bikes.
Well, this country isn't built very well for bikes. In the urban areas, yes, bikes have become more popular, and you've got these stations where you can just take a bike and drop it off somewhere else. But then, of course, we read that the young populations of the cities that ride these bikes are fixing to abandon the cities. So bike's fine if you got the kind of neighborhood where you can ride around and get some exercise. But I don't think it's going to be basic transportation the way it has become in Europe.
Rick, thank you so much for chatting with us.
Well, thanks for inviting me on, Jim. Always a pleasure.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.